Well, good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And we're talking now on Thursday, September 26th, 2024. Let's wish everybody the best of luck with this Hurricane Helene. It's now a Category 4. It won't even make landfall until early morning, and then it's going to be headed not only through the Big Bend area of Florida and the States, it'll hit ground as a Category 4. I'm fearful it could be higher. And then it heads on to the Atlanta, Georgia area. And they're saying a Category 2 can hit Atlanta. I don't remember hurricanes hitting Atlanta. I could be very wrong on that. I was there once in an ice storm. I'll never forget it. Driving was taking your life in your hands. These people just aren't ready for that type of weather. You know, in Chicago we are, and you still get people crashing all the time. But when you're not used to it, it's really scary, and I can only imagine. I can't imagine the damage 20-foot surges they're talking are going to do. I don't know if there'll be crop damage that's done as it swings up, and it's going to be making. We're in Chicago. Over the weekend on Sunday, we're going to get rain from it. And then it's going to be swinging around, and the question is, what does it do as it heads east eventually? So it should be an interesting couple of days for everybody. Keep your eye on the Weather Channel. Now, the weather in China is pretty interesting. Today, actually it was last night, the Politburo finished up, and they threw another $284 billion commitment at the economy, especially to help the provinces that don't have money coming in because real estate isn't selling. And they count on that in many of those areas. So this is going to go a long way with all the other stimulus measures. The problem is markets hear this and they all buy in like it's going to happen right now. It's not how it works. It works over time. Probably everything that they've said is yet to kick in. I'm sure over the weekend we'll get the rates that change. I've not heard anything yet on the mortgages, but that'll be there. We know that we're getting one immediate cut in the reserve requirement. Another one will be coming by December, if not earlier, because now that China's going on this, they'll keep going on it. And of course, you get markets that have run on it, like we've got the gold market, the silver and the copper have gone bonkers, and they should. You've got the United States cutting interest rates. We were late to the party, but we're here now. You've got Europe probably going to cut rates. Just look at Germany and the problem they're in, and that's their biggest economic engine. So they'll be coming down. We have China going. And as you do all this to spur on economies, it creates inflation. It's not immediate, but it's coming. And that's why you're getting these moves in some of the copper, the gold miners moved on it. Tesla finally giving up a little on a day like today. NVIDIA gave up by far the best gain of the day. If you were with me this morning on my subscriber video, I said 126 area, probably going to see some money coming off because you were getting up to the Bollinger Band. It stopped the market like a rock. I like Amazon. I'd like to see it drop a bit more to get excited about it. Home Depot, just holding right here under the 400 level. It's a pretty important number. So what do we have coming for us tomorrow? Because it's one of the Fed favorite days. We're going to get the PCE price index for August. That's really what the market's going to look at first thing. And as usual, it'll be bullish or bearish. The market will yawn, 15 minutes worth of trade, and then it's on to whatever it's going to do. We get the final University of Michigan Consumer Sentiment Index. That'll be coming out, and we'll see what September final number looks like. Earlier, we got the prelim, and as you remember, people got worried because it's not rosy. It's coming down. We'll see if this did a little better now that we've got a rate cut, but might not. All right, let's go to the chart action and see what we've got. When you look at Restoration Hardware, I was hoping you'd come in and fill some of these gaps. It has stopped going up, but it's not filling in anything at this point. I'd like to see something done with all that. We'll see if it can do it. The market is stalled out. I think you'd agree with that. We'll see what goes for the next step. You've got the setup going where the 18-day average is now over, as you can see, the 200 and the 100. And you might even get finally the green line getting over the gray where the 100 gets over the 200. You ran into the Bollinger Band and you went up for 2 days after that and you just plain ran out of gas. Now, consolidating is not a bad thing when you have an embedded reading. So I'm not bearish. I'd like to see a pullback, but it's very reluctant. Until the red line closes under 79, it's just a wish and a hope, and I don't think you're going to get it. I think the pros are buying this break, looking for another leg to the upside until that's gone. The automakers are in trouble. You can see how Rivian's got the Gorilla Glue trade. That often leads to a bearish embedded reading, and you can drive the market down. So I was hoping to see the market get down to 11.5 or 12. And then when this developed and started developing and I saw the crossover, I said, you wait, maybe it goes to 9. Wherever it's going, let it do its thing. But you've got the market breaking out here. It's not a classic breakout. It's a riding the Bollinger Band, but this bearish crossover is terrible. Now you've got the 18-day underneath the 100, the 100's under the 200. The bears are going, that's beautiful. That's the type of setup I like to be short. And that's what you've got. CrowdStrike, as I told you, I thought the market got ahead of itself here and it's going to give something back. I've said it, I think, every day for the past week. And you're starting to get that pullback. Wouldn't surprise me if you get towards 268. I'd like to see that too. Uranium, it's the new product. People now understand just what's going on. Europe, they're talking again. How do they build these mini, and that's what the word's going to be, mini nuclear reactors, because that's what you should be doing to run these AI factories that are going to be all over. Why not? If you have the technology and the know-how, you go with it. So you're getting a nice run, but understand, rarely do you stay up over the first challenge of a 200, 100-day average in the Bollinger Band. You generally like to fall back from there, and uranium just pulls the plug on you when it does that. However, is it bullish? I don't want you to write me, oh, Ira, it's still running. It is bullish. I don't see anything that isn't bullish on the chart right there. The home builders, as bullish as people were, I thought I did my job of saying, not time to buy them here. And it isn't. But where have they stopped the break? Do you agree that the 18-day average has stopped the break in the market? I mean, right on the money. This is where the market's going to decide what it wants to do. Now, if it gets and closes the week under 180, 110, you might be having another $6, $7 break. If it doesn't, this could be where the market bottoms out. The home builders are gradually weakening, and be on the lookout here. If you get a close under 79 tomorrow, it probably means coming for here. You have to hold this right now. So you're at a nitty-gritty number time in the home builders. In XLF, well, this market's been coming down ever since yields have been climbing. Remember, and I think you do, that this was the climb up into the Fed meeting a week ago when they cut their interest rate. And ever since that cut, it was buy the rumor, sell the news, you've come back. But have you gone anywhere? Just like in the home builders, you're now at that 18-day average. From here, the market decides what to do. And, we wait to see what it is. In the industrial sector, as long as you keep the bullish embedded reading, breaks in the market, I mean breaks, not 50-cent breaks. Breaks in the market will probably get bought, lose that reading, and you could return to the 18-day average. But as I see it, tomorrow's data, PCE, is probably going to make or break this trade to a degree. On the energy markets, the Saudis are going to produce again. Word is that December 1st, they want to start production. We've been producing like there's no tomorrow, as you're aware. Libya's back in. The two warring factions have made buddies again, and we'll get some oil production. That's weighing on the market. And again, I'm going to repeat. You get a hurricane, a Cat 4, going for the American platforms of natural gas and crude. And I read today that yesterday some of the shut-ins in the rigs for the oil were up to 29.6% from the BSEE, which is our safety bureau, and today they were down at 25.6. So that storm track got out of the way of some of this, and you add that to it, and no damage so far. That'll be the interesting thing. I don't know what, when we wake up in the morning, the damage is going to be. Gold market, need I tell you, you heard me already say, you've got Europe cutting rates, the US cutting rates, China cutting rates. The big boys are in there. It's hard to be bearish. You want to buy the breaks. Same in the silver, but I wouldn't be reaching for the market up at a Bollinger Band, I can tell you that, and I would not be telling you to buy copper over it. Plus, I think copper's ahead of itself by a lot. So I might eat crow if the market goes up to 55, say, but I think the market's getting ahead of itself. TLT and BND, if you look at the weekly chart in BND, this is where the support came in today. You came down to the Bollinger Band, and you're basically not trying to go through that in TLT here, so we might be getting a little bit too far. Dollar's at a crucial area. If you can't get through this Bollinger Band, you're going to churn in here and get spit up. You got to be very careful now. You need the market to break out of this if it's going to do anything to the downside. And in the euro, you're up at the upper Bollinger Band, and that's going to be a big problem for you because that's the resistance point. Something that is of no problem is education. And we try our best to give it to you with all the different free offers. Now, if you haven't seen my Spider ETF video, I'd like to give it to you for free if you haven't tried it. Many of you have. My research, my twice daily research, free charting access to this charting software, our QT platform. You can also get from us our free price counts. You can get the free courses that I give in pivot points, as well as the Arun indicator. So you put it all together, you come in, and you click on this blue area. That's what that is, select free offer. And at the bottom of the page, it'll ask you eventually to put in your name, your email address, so we can send everything out. Everything comes by email. So go to Ira Epstein free offers or move your cursor to the top here. I'm Ira. I'll catch up with you all in the morning. Fingers crossed for the people in the path of Hurricane Helene. Take care.